Hi everyone, this is Lars from Figo, and welcome everyone here for the Bright Talk about coding the future of FinTech with smart APIs and financial data. I'm very happy to welcome three other guests here discussing this very interesting topic. It's Bharat from IBM, Stefan from Ignite, and Jal from Carter Worldwide. First of all, I would suggest each of us give a small introduction to a small presentation about himself before we dive into the topic. I would ask first Bharat to start. Bharat,
Thank you, Lars. Thank you, Lars. I'm very well. Thank you for having me here, and I'm delighted to be speaking to all of you on this call. My name is Bharat Bhushan. I work for IBM in the UK, and I'm responsible for the technical strategy and solutions for banking and financial markets sector. So API and financial services is a marriage made in heaven, and we'll go into details of what our views on that is shortly.
Okay. Thanks, Bharat. Bharat was mentioning he's right now attending an IBM conference and was trying to find a quiet spot. Apparently, he was successful. Next one is Stefan from Ignite.
Sure. I'm Stefan Dubois, the CEO and founder of Ignite. For those who don't know, Ignite has the largest and most popular suite of financial market data APIs. Just to give you an idea, during the time this webinar will take, we'll serve about 350 million API requests, and probably even more because the market is just opened. Ignite introduced one of the first commercial pure play REST APIs back in 2003. So we've been doing this for a little while, and we have had quite a bit of experience with offering commercial APIs. We're based in Silicon Valley. We're a venture-backed company. We have about 50 people and 1,100 customers around the world. So our technology integrates data sets coming from many different sources, many different markets, more than 30 million financial instruments, and offer a very tight integrated suite of APIs, which developers, either in fintech companies or in large financial institutions, use to build applications, power applications in a fraction of the time and cost that it would take to use a more traditional legacy solution.
Okay, great, Stefan. I'm actually really looking forward to your input on this topic. I mean, you will tell a little later about maybe a little more about your history and background of Ignite. But you've been with the company around for quite some time and have a good impact on the whole industry on API, financial data. So looking forward to your input. Next one is Giles Sutherland from Carter.
Thank you, Giles Sutherland, Vice President of Strategic Development at Carta. And Carta is a digital transaction platform. We are a next generation issuing processing platform focused on the digital space. What that means is effectively offering the core payment processing and services required for a lot of the banking functionality, but designed with a modern architecture, really focused around a lot of the innovation coming out within the fintech space. And what we're seeing is a new wave of financial service providers, both from fintech, let's say quote unquote disruptors or challengers, as well as the incumbent players looking to, let's say, innovate and compete against these potential threats to some of the established ecosystem players. And much of that is being powered by the APIs and the broader ecosystem that is coming into place. And so our role is as a technology platform that is, let's say, more open to integrating to those APIs that are out there, as opposed to some of the legacy systems, and powering some of these new payment products and the use cases. And I think some of the things that we'll likely get into in the discussion today.
Okay, great. Thanks, Giles. I will finish up. As Giles mentioned, there are lots of new financial service providers right now being created, and I'm from a company called Figo. We are based in Germany, and we are also something like a new financial service provider. We are an API provider. We provide access to financial data. We are obtaining data from bank accounts, credit cards, and so forth, and provide them through one data to our customers, and our customers are mainly fintech startups, but also more and more banks, and of course the whole movement around open APIs, open banking, PSD2, etc. We'll all talk about that later on. Is of course at our core. I'm very happy to have you guys here on board for this interesting talk. I think we are spread around the world and also have a little different areas. So we'll try to talk about each person's background and what is the core interest in the area a little more deeply. As I said, I'm the moderator. However, please feel, as mentioned before, please feel free to suggest any questions or topic you would like to cover during the call. Also to the audience, you are very happy to ask us some questions. There's a Bright Talk functionality to send questions to us during the talk. So if you feel like we should cover one topic or the other, please make use of this. It will also help us to know what you guys are actually interested in and what we should talk about. In order to give you after this introduction of each person, we did discuss before the call how we should start, and Stefan was so nice to provide some slides about the history of APIs. So when talking about we are coding the future of fintech with smart APIs and financial data, we thought it makes sense to give you a little insight about the whole topic of APIs and the history, like why we are talking about the topic. And so I would ask to Stefan to introduce us to the history of APIs. As I said, Ignite has been around for quite some time, I think 2003, so can give us a great input in the whole story of the API development. And of course, everyone can contribute and ask all the questions to Stefan if he would like to. So I would hand over to Stefan to introduce us to the topic.
Sure. Thank you very much, Lars. So you're going to see a little slide here that shows a little timeline of the history of APIs, a little bit of a history buff. Maybe some of you are interested in that as well, and I think it's always useful to look in the back and see where those technology come from. APIs are big now. It wasn't always the case, and certainly the fintech revolution over the last 2-3 years has been fueled by a lot of that. So this is looking a little bit before that. I would say that the history of APIs was laid out by the invention of new technologies and standards such as HTML, XML, SOAP, and JSON, that you can see on the bottom of this timeline. HTML in 1990, XML 1996, REST not until Roy Fielding's thesis on REST in 2000, JSON 2001. So these were all the underlying, if you want, technologies that made the generations of APIs as we know them possible. One question would be, hey, what was the first really API as we know it today? You could say it was the IMG tag that was introduced by Netscape in 1993 for the first time, with the idea of essentially having a simple tag that allows somebody to access a resource on another server. Flash, iframe tag were a little similar, but it was really not until 1999 with actually Microsoft introducing the HTML HTTP request method that some of the oldest of us might have used, that really kind of lay down the concept of APIs as we know it. Now, on the commercial side, the first really instance of a public API, a web API, was really Salesforce. When they came out in 2000, right off the gate, they had essentially exposed APIs. So as far as I know, and if any of the audience can disprove what I'm saying here, please send me a note. I'd love to hear about it. But the first public API was Salesforce, followed by eBay, if you want, and Amazon as well. Initially, obviously not Amazon Web Services, but their first API for e-commerce, if you want. We introduced our first commercial API in 2003, actually, and it was not based on Amazon. It was not a cloud API. It was just a traditional web APIs. You had obviously a slew of other introductions later on. Flickr, Google actually came pretty late. Facebook, 2006, PayPal in 2008, and whatnot. And it's not until the 2013 that you will see the fintech wave really starting. And that was really much fueled by the availability of APIs. So this is, if you want, some of the precursors of the technology. The landmark event, I would say, in the history of API was the infamous Jeff Bezos memo published in October 2002, It's easy to find it on the web if you're interested. The idea, what Jeff wrote to all his employees at the time is saying essentially that any kind of inter-system processing inside the Amazon technology had to be done through APIs, even though it wasn't called that way at the time. There should be no direct link, no hard-coded anything, and whatnot. And Jeff Bezos finished a memo saying, you have to do this or else you will be fired, which is obviously makes it great and legendary. And you can argue that this is actually the memo that that made it possible for Amazon to essentially optimize its own infrastructure, which led to the creation of Amazon Web Services in 2006 with S3 and EC2 shorter after that. And that's what really truly changed the world because now we had a shared platform that made things incredibly scalable. Obviously, another landmark event is the introduction of the iPhone and the introduction of the notion of completely API-based applications and a whole new user experience that also really fueled everything. And without APIs, without that kind of technology, it would not have been possible.
Stefan, can I just ask a quick question? Yeah. I mean, you just talked about Jeff Bezos, the API memo in 2002, and as you can see on your slide, your company, or you founded your company in August 2003. I mean, what I understood is your company was, of course, an API company, so your main or your only product was an API for the financial service industry. That's correct, right?
That's correct, yeah. I have yet to find out. Go ahead, ask your question.
So I was wondering, like, maybe can you tell us a little bit, like, how was it at that time to actually start an API company? Was it like easy to convince your customer people to get involved there? Maybe give us some. I think it's a very early time for an API-focused company in the financial service industry. So maybe can give us some input on your experience.
Yeah, I can tell you that in truth, nobody cared. It took a lot of time. We had our first APIs back then, and now this year we have already served more than 1 trillion API requests on our platform. In the first 9 months, we'll serve more than 1.5 trillion this year. But it's really in the last couple years that adoption of APIs and the use of them truly as a platform, which has been enabled by use of the cloud, has really transformed. So before that, it was mostly early adopters who used those technology, and so we obviously had very little uptake in the very early days. But starting with around 2008, 9, 10, a lot of the FinTech companies started using us. Right? So the robo-advisors, the Wealthfront, the Personal Capital, the Betterment, the Robinhood, even all the big FinTech companies didn't want to use legacy technology for market data, and they started using API. So we saw that they used us very early on, and that ultimately, they took off themselves, and that's what created the FinTech wave. And now what we're seeing is, a turnaround whereby initially the large banks weren't really paying attention to this technology. They didn't feel it was right for them. But now they're taking a hard look at it because of the cost benefits and the ability to innovate thanks to it. It was a crossing of the desert, if you want, waiting and making sure we scale the technology to be able to ride the wave later on, if you want.
Okay, and I think Bharat, you were also around at that time already as a developer. Can you give us some insight how your view on the market was at that point of time?
Yeah, sure. So it was interesting listening to our colleague. I was doing development in the mid-90s to early 2000s. And as a developer, I can tell you that it was very tightly coupled. APIs were primarily used internally within the organization. So the concept of governance, for example, wasn't quite there yet. And there were tools and technologies that weren't quite as standardized as they are today. But it was certainly around the boundary of the API was within the organization. So the department might create an API, and they were very tightly coupled, whereas when you look into this diagram, sort of from 2000 onwards, all of these APIs were then external, and the boundaries of the organization expanded into the cloud world that exists today, and hence leading to the FinTech wave that exists now.
Yeah.
Okay. I think that's a great transition back to Stefan for a second slide, right, where you compare the different generations of APIs.
Yeah. Yeah, I think what Barrett said made a lot of sense. If you look at generation of APIs, which would be the next slide, the standards and the technology that was available was really critical. That really critical to the takeoff. And we're in a very different world that we used to be. So I like to define three generations of API. Well, first you had the prehistory of external libraries when APIs didn't really exist. On the left of this chart. Then, of course, you had RPC, remote procedure calls, where you had some beginning of standards, very complex, that allow you to potentially call a resource in another server. Maybe Barrett did some programming in that context. We talk about CoreBat that came in the early 90s and whatnot. So, yes, you could call an API remotely. It was a little shareable, but it was complex and it certainly was not scalable because all you had on the other end was like one server, right? Now, with the web, what I would call web APIs, second generation APIs, you have the notion of SOAP and REST coming around. There was a big battle around that. But now using the internet, so you've got really shared resources. The standards are easier, right? So there was the big battle with SOAP versus REST and REST win. And so you've got standards. You've got standards that everybody's starting to embrace. And on the back end, you've got web servers, you've got farms potentially, so it gets a little more scalable. So this is where we've seen a lot of the growth on the history that I showed before, starting with 2000, emergence of REST, introduction of a lot of public APIs, if you want. Now, the third generation API, I think, is very important, which we call Cloud API, which is in this case, it's still the same type of REST APIs. Based on the internet for sure. But now you're talking about running on a mutualized infrastructure. So, many APIs talk about data and trying to get data, for example. And if you have a cloud infrastructure, a public cloud infrastructure, you can store the data once, right? And you have a cloud that's infinitely scalable if you want. So it's simple. It's essentially serverless, right? You can call those APIs essentially move your infrastructure down to those APIs. It's not just a transactional piece. It's not just I'm going to get some data from you so that I can store it on my servers, for example. It's like I'm just going to get data from you on demand, right? And obviously Amazon made that possible with their own, infrastructure APIs. But more and more, because APIs can be built on top of Amazon, they can offer the same level of, serverlessness, if you want, as if that's a word. That Amazon is doing. And that is opening, I think, a whole new world of possibilities to APIs, to some types of APIs.
Okay. Thanks for that deep input on the generation of APIs. The other, like Barrett, Jill, Giles, do you have anything to add? Like Giles, have you also been involved in that early already in the world of APIs?
Personally, I haven't, and actually as a company, I would say our business launched in 2007, really, I think, benefiting from these later generations of services. So I think in many ways it was identifying the impact of this evolution of APIs and what that would mean for the payments and financial services ecosystem that led for was behind the inception of our business, really seeing that there's a gap between, I think, what could be possible by leveraging these APIs and some of the FinTech use cases that were mentioned, both in some of the, let's say, investment aspect, but going right down to kind of all areas of retail banking and consumer payments, and really a divide between the existing kind of legacy banking infrastructure that was designed for old mag-stripe credit cards, and what we all now are seeing is this kind of big wave of FinTech where there's almost an unlimited range of new products and services and ways that people are interacting, thanks to these APIs, making for a much more dynamic, much more exciting ecosystem. And our business really was launched as a response to that, to be able to enable new fintech players or even the incumbents to launch products and services that would be able to capitalize on this growing ecosystem.
Okay, great, thanks. We have now 20 minutes into the whole discussion here about the coding the future of fintech APIs and financial data. Again, for everyone who joined later to this talk, please feel free to ask them some questions. You have a chance to send us directly questions to the presenters. So if there's anything you would like us to cover and talk about, feel free to do so. So we have, like I said, 20 minutes in, we have talked now about the history and other general generations of APIs, lots of general things. I would like now to go forward to another slide. I think it was created by Bharat, but I would invite Bharat and I think also Giles, who had similar slides, to make a little bit of a shift from APIs towards banking, and of course the European listeners, but also all around the world should be familiar in the area with PSD2 and the whole, of course, open banking movement. Could, like Bharat or Giles, could someone give us a little introduction what PSD2 and also open banking is about? Like, keep it very short, but I think it makes sense for everyone to clarify.
Okay, this is Bharat. So Payment Services Directive 2, as it's abbreviated as PSD2, is a European directive at this point. It affects the European Economic Area, so all of the 31 member states across the EEA region. The fundamental crux of PSD2, as we will go through in the next couple of slides. In fact, why don't I use the next couple of slides to explain the use cases of PSD2. So PSD2 really, if you look at how customers do banking today, this could be a retail customer or potentially an SME corporate bank customer. Today, when they have to look at their account balances, look at account data, transaction data, they all have to use different channels provided by different banks. So multiple corporates, multiple organizations would have more than one bank account, whether they're an individual, and similar to individuals as well. So individuals would have more than one bank account, perhaps credit cards, maybe some kind of offset mortgages as well. In the PSD2 world, all of these account service providers, also known as ASPs, all of these banks at the bottom of the screen will have to expose data about the products and also about the customer data, that may be payment information or transaction information, to a third party depicted as an aggregator or an AISP. So therefore, Josh, who's in this instance the end customer, doesn't have to use the channel, doesn't have to use the mobile app or the web interface provided by the bank, but instead they could use a third party app provided by somebody else to look at their account balances. The benefit for Josh in this instance is that he doesn't have to use 10 or 15 different apps, or he has to remember different passwords. He can simply use a simple to use interface to aggregate all of the account information. The key point here, and we'll sort of discuss this as we go through this, and you'll have a copy of the slides to download as well. The interesting part here is that the banks potentially cannot charge the aggregator for that service provided to the aggregator. So they have to treat this AISP, the aggregator, in exactly the same way as they treat Josh. So if they cannot charge Josh for withdrawing cash from an ATM or paying for a coffee in a shop or withdrawing cash, etc., they have to treat this aggregator in exactly the same way. And there are certain accounts that are in scope. So one of the often quite confusing for banks is whether which of my hundreds of products are in scope of this particular regulation. So it's specifically called out to be the payment accounts, i.e. your end customer, whether it's a corporate or an individual, can perform a transaction without having to have a prior agreement with you. So I can just go out to an ATM and draw cash or pay for products and services without having to call my bank first. So all of these, and we will link it back to how APIs will affect this. But there are some key questions here. So if suddenly a FinTech or an aggregator could be a born on the cloud digital organization, can then disintermediate the bank from its end customer, but what's the ROI? What's the return on investment on the front office systems that we have built over many years why should we make it easy for the aggregators? This is where the APIs and the standardization of those APIs would come in. And in the next few minutes, we'll talk about the role of regulators in this space as well. Charles, is there anything you'd like to add?
No, I think you summed it up perfectly. I think that's a great context, and I think as you summarized, really opening up what we expect to be a whole new wave of innovation, thanks to the regulators kind of instituting this kind of far-reaching shift within the space.
Cool. One of the questions on the chat is, will traditional banks be replaced by FinTech banks one day? And I think we are already beginning to see that. I'm sure many of you have seen that diagram of the bank's homepage and different sort of arrows pointing at different services and FinTechs providing. So if you look at how core services of a bank are now being provided, whether it's lending, insurance, money transfer, so the answer is absolutely. I mean, many of our banking clients are telling us that customers need banking services, but they don't necessarily need banks. So yes, I think it's about innovation. It's about delivering customer needs with a brilliant and smooth and gorgeous client experience. And if the client can get that experience from going to a FinTech, then they would absolutely do that. There's an element of trust. We can touch on that as we go through this. So FinTechs do have, in my view, a hard time earning the trust of an end customer. We've seen that with robo-advisors, right? Robo-advisors came around since 2007, 2008, and they hit a plateau where they couldn't increase the level of customers after a certain point, and that was one of the reasons was particularly the trust, because nobody had heard of a FinTech in that space, but everybody had heard of a bank, and they'd invested their money with a bank for many years.
Okay,
great. If I may step in on this one, this is Stefan. Answering a couple of the questions on banks being replaced by FinTechs. I mean, I say the large banks, most of the large banks will still be around. The biggest challenge is one, they have a hard time innovating, right? So they were focused on regulation actually post mortgage crisis, and they didn't innovate for many years. Opened the road for Silicon Valley to reinvent a lot of things. So they have a hard time innovating, and that's certainly a risk. But the biggest issue is they have such a high cost infrastructure, right? FinTechs are able to leverage the technologies we talked about, APIs, leverage the cloud, to essentially build the same capabilities at a fraction of the cost. And we're not talking 20% less. We're talking about 10x or 100x less the cost of large banks. And large banks are big, large ships that are very slow to move. And for them to go and overhaul this internal technology infrastructure quick enough will be a big challenge, I think. And this plays into the second question about robo-advisors. There's a question that says, do robo-advisors use APIs? If yes, which functionality is being realized that could not be without APIs? Yeah, go ahead.
I just want to say, Steph, you probably have some good answers to that question. I guess with Ignite, you have a couple of customers in that area. So maybe if you don't have a general answer, maybe give us some insight about what are the guys exactly doing with you, and what couldn't they be able to do without you?
Well, first, all robo-advisors use APIs, whether it's ours or somebody else. But I've mentioned many of them. And they all use APIs from inception. And it was Andy Ratcliffe, who was the founder of Wealthfront, which was probably the initial first prominent robo-advisor, who said that the business was enabled by APIs. The business was enabled by actually three things. One, exchange-traded funds, which made it possible to do cheap, passive investing. But then it was enabled by trading APIs, which also came to life around that time, and by market data APIs. And the reason is because they didn't have to spend time figuring out all this legacy stuff. They didn't have to spend their capital building that very expensive infrastructure and consume essentially 80% of what they did. Instead, they were able to focus on the customer. They were able to come up with new business models. They pivoted many times around to find something that worked. And now this is something found something that works, that can scale, and that is profoundly transforming the industry. So the data they're getting from us, they can get it from legacy technologies, but they cannot get it quickly and easily. It would have taken them many more years, $1 million more dollars to be able to reinvent things. So that's certainly what APIs enable. And that's why large banks now are like, well, I'm going to have, if I want to compete, if I want to innovate, I can't just keep, all this legacy technology stack. I've got to move to the cloud. I've got to start using APIs. I've got to reduce my cost structures.
Yeah, I completely agree. I think you guys just answered the two first questions from our audience. And I think the answer, what I heard from you, is you can paint one picture, what is the two things have in common? Will banks be replaced? I think the answer is hard. My personal view, it's hard to answer. However, what we do see is what just mentioned about the robo-advisories and the API. At the moment, everyone is just focusing, or especially startups are focusing on what they're doing best, and they're of course very, very fast and agile, using APIs from lots of different providers. Open banking PSD2 is generating a lot of data and access to financial sources and other things, and lots of opportunities out there. So it will become tougher and tougher for banks to compete against them. And fintech banks, can just take a look, for example, at Solaris from Finleap, which is kind of a fintech bank, just partnering with fintech startups and provide service to them as a modern and agile bank, not as a traditional and rather slow bank. It is an interesting development. We still have to see where it goes, but traditional banks are fighting on dozens different places against different competitors, so it will be tough for them to win all the battles. But at the end, I think everyone has just to focus on what it can deliver best. And my personal opinion, I truly believe that traditional banks also have an advantage and can offer something, but they have to focus on that in order to be successful. And some of them will definitely not, because they will try to win all the battles instead of focus on one or two.
Yeah, absolutely, Lars. I think one of the challenges that we see is around the culture of the organization. So they have the technology, they have the enterprise-grade robustness in solutions that they have implemented, but quite often, especially when it comes to innovation and APIs, it's also as much about culture as it is about technology.
I totally agree.
I'll just briefly answer one of the outstanding questions around, is there a payment service provider use case in PSD2? Yes, absolutely. That's the second use case. We didn't go into the details of PSD2 and open banking, but that is absolutely one of the other use cases for a PISP, a payment initiation service provider. So just like PayPal does today, you can authorize a third party to process or initiate payments on your behalf, which is quite significant. If you think about this, I think in 5 years' time, we'll be all sitting here thinking, my God, we're not using Visa anymore. We are not using MasterCard anymore. And you're effectively completely bypassing those card schemes, and you're paying directly out of your bank account. Now, I would like to reiterate that just because Josh, in that example I gave you, has a choice of doing this via an aggregator or via a third party, doesn't mean they would do it. So, right? So we don't think that everyone would be using a PISP or an AISP, but there would be a significant proportion. And if those initial business models and client experiences are successful, then there will be an increasing number of even the non-millennials and non-digital individuals that would be using those third-party services as well.
Okay, great. Thanks for that. Again, we have just answered that third question, which was sent to us directly from the audience. At the moment, there's no open questions, so if you have any, feel free to send them to us, and we can cover that in here as well. Before we talked a little about, with Stephen, talked about the robo-advisors and the usage of APIs. And I'd like to ask into the group here, do we have any other, I personally really enjoy to talk about real life examples, because we talk here about the coding the future of fintech with smart APIs and financial data. Robo-advisory is of course a great example. Is there any other a big topic you would see is right now heavily benefiting from the open banking and smart API movement? Is there a specific area you see will benefit in the future? Does anyone have an opinion about that? Without directing right now, because I'm not sure who will
Yeah, this is. Sorry, go on.
Sorry, this is Giles Zacarta. I'll maybe take a first stab at that, and sort of interrupt, and you can follow up. But yeah, I think we see a pretty long list of use cases and ways where this is changing the landscape, and I think around all functions that the traditional bank is performing. So we see lending really changing here, where new risk models are allowing for more sophisticated approaches rather than just traditional credit scoring. Very interesting and dynamic approaches for how lending and credit is applied, and that certainly is made possible by these APIs. And then both in terms of how those decisioning functions are taking place, but also the timing, where you can actually now see almost instant lending for even retail consumer type purchases. So rather than just a line of credit or credit card, you could be financing just the purchase of your television or something. Likewise, insurance similarly is becoming much more dynamic, changing from a very kind of static, rigid actuarial model to something that can be done more in real time. And there's a use case I was just discussing the other day where there's a company called Trove, that's allowing almost real time insurance of anything you have. So if you're in a bad neighborhood, you could insure your smartphone in your pocket just for a brief period of time. I mean, that's totally changing how these traditional banking functions are taking place. And then that list goes on and on. Money transfers, you're seeing companies like TransferWise in Europe really changing how these models are taking place. And to the consumers, I think across the board, the consistent trend here is something that is most often a very big shift in terms of the cost and economics. And in all cases, I think the user experience is in line with what the expectations are. I think the history of APIs was a good walkthrough because it really shares how I think the average consumer is been growing with this kind of technology evolution, and now is expecting a technology ecosystem and a user experience that is instant, that is delivering services in these ways. And the banking world and the banking infrastructure really hasn't kept up. So the idea that it might take you a few days to transfer money from A to B doesn't really match with what consumers' expectations are, or that it might take you a few days or have to go physically in branch to apply for a new account, when the average consumer thinks that it should be just like downloading an app, which takes place instantaneously. So, I think really, I mean, maybe that was a very long way to say this, but I think this is impacting every single function of the bank. I think robo-advisors is a good starting point. But I think I think every single function that is traditional banking and payment services is being impacted by this.
Yeah, I agree. This is Stefan. I would say the impact is what you said: cost, right? Speed and experience, right? So cost, if you have lower cost, you can do new things that you couldn't do before. So we've had, beyond robo-advisors, we've had customers creating, zero-cost trading, right? If you're able to leverage the cloud, if you're able to consume what you need on demand, you don't have a lot of infrastructure behind, your costs go down, and you can pass that to the customers, and you have new models that you can create from that. So we've had some customers like Robinhood who've been able to, by leveraging APIs, offer zero-cost trading, which was really hard to do before. Speed, you mentioned it, onboarding. What got the robo-advisors to take off was less the fact that they provided, online advice, the whole model of asset allocations and whatnot. That existed before. But what they were able to do is get you going in like the same day. And the industry used to be, you want to open an account, it's going to take you many days. And it had been like that for a long time, and there had been no innovation, right? There's been a dearth of innovation in financial services. And obviously the experience is the same thing. We see that, in terms of what the users will see, what the user will feel, and we get into the millennial discussion and instant gratification and just great, mobile experience. But, there's been many examples of where speed, cost, and experience have had a significant impact on financial services.
And Lars, this is Varas. I'll give you one example in a B2B context where if you think about how financial instruments are constructed and managed and traded on the platform, we work with many clients where they're using, for example, weather data. So if you look at how weather API is available, we host that platform. We have 26 billion weather API calls made every day. So in 24 hours, we get 26 billion API calls on the weather platform. And you could use that data to really understand the changes in weather supply and weather and how that is going to affect the demand and supply of a commodity, for example. That may be a utility, gas, electricity, or perhaps crops. So how that would affect the price of a commodity crop. So not just in the client experience part, but also internally in financial markets and on stuff that's not visible to the end customer on the high street. APIs are playing a critical role in the success of those businesses.
Interesting. If you guys, this is Lars. If you guys allow me to add also one thing. I mean, we as I said, we are a banking service provider from Germany, and we actually host our own hackathons. We call them Bankathon, and just the last one was last week here in Hamburg during the first FinTech week in Hamburg, and we had like roughly 85 developers participating, using different APIs, not just ours. There was SAP, Visa, and many blockchain, many other APIs were around there, and it's like what you just mentioned, Bharat, like always so interesting and amazing for us to see that what's happening if you just combine a couple of APIs, and that doesn't necessarily need to be an API from the financial service industry. Can be just anything, and you see results you probably wouldn't have imagined about it. And I mean, this hackathon, we actually completely focused on open banking, so PSD2 and access to account. I mean, it's a hackathon, so of course a lot of times you see something which is not really a business model or that will probably not make it to the market, but it's always interesting what some developers think about if you just give them the opportunity to access certain things, and then seeing the result is always for us and also for all the traditional banks who were present and saw the final pitches, very, very, very interesting insights.
Absolutely. I was actually going to comment on the exact same thing. So what's changed since the late 90s, early 2000s is not just the standardization and the governance model, which is quite important, but the ability to connect APIs from across multiple disciplines and create value for the end customer. So think about the example you took in the hackathon. So I'm sure in that hackathon there were APIs from Google, Amazon, Microsoft, Xignite, a number of different platforms, and the cloud, and think about what these APIs are doing. These APIs are literally just providing data to a business customer or to a technical audience, and they are able to use that data in providing better service, better understanding, and a better client experience. And I think that's so the ability to connect these multiple disparate APIs, which no one had thought before, is what's changed and what's making these APIs smart as opposed to dumb.
Yeah, totally agree. Last thing to add, the hottest topic actually at the event was voice, everything around voice banking and voice payment. So I'm looking forward to see what is happening in that space, and APIs will empower that for sure. Yeah.
There's a new question which I think is interesting. Somebody says, I think the technology is much talked about, and at the same time, the examples of actual concrete problem solving using these would be great to discuss. So robo-advisory could it exist without the technology, but what have the APIs solved? We have talked about a few of those, right? But again, it's taken any robo-advisor today. They'll provide you with account aggregation information. Not all of them, but some of them. That's API powered, right? That exists. Obviously, this is not standard-based like what the new regulation will do in Europe, but you have providers like Yodlee and others that will give you account aggregation. All of that is API powered, and it wasn't used heavily before that. Now I'm able to sign up today and instantly get an aggregated view of my account and my provider. That's enabled by APIs. The easy onboarding we talked about, also API powered. Without the APIs, the onboarding of robo-advisors would still be, 3, 4, 5 days, and you might have to fax something or sign something that you fax, which would be the most horrible idea, right? You have lower fees. Robo-advisors made a lot of their message around, hey, we can actually automate things, and we can reduce your fees. And that is because they are using a technology platform that's much more cost-effective. They're relying on APIs from Amazon. They're relying on APIs from X-Ignite and others that are much more inexpensive, and they're able to pass those fees to the customers. And we talked about experience and whatnot. So all of those innovations were enabled, most of them were enabled by APIs. Hopefully that answers the question.
I think it does, and I mean, we also on our API we see lots of different use cases, and completely have to agree with you. There's most of them make it possible for the end consumer to use something in real time. It's real-time scoring, real-time identification, real-time usage of a service, which brings, of course, a lot of value. On the other hand, it's very often making it for the provider, for the business, easier to handle things, to process things, and it's different areas, different pain points solved by APIs for this fintech startups, but also for other players. So again, we are 3 quarters through our webinar, just around 14 minutes left. I think at the moment we've answered all the questions. So if there's anything else you would like to talk about it from the audience, please submit your questions now. We can still discuss them. I would like to cover one more topic. So we talked about all the future of smart APIs, financial data. We talked about PSD2, which is of course a European thing. Do you think the European, the countries in the European Union will lead the whole development around this access to data because of PSD2? Are there maybe other areas somewhere around the world? I'm not sure where all of you guys are based. I know Stefan is based in the US. Maybe is there something else happening in the US, Stefan? What other areas could be affected, and maybe some of you can also give us, of course, Brexit is affecting the whole story as well, and I think there is own development in the UK happening regarding open APIs, so maybe some of the others can give us some input about that, but please, Stefan, start. What is the American view on all of that?
Well, obviously, we've had commercial products available similar to what PSD2 will provide for quite some time, right? So and as I just said earlier, those were quite instrumental in helping with the fintech revolution and really changing financial services. So I think there will be an impact in Europe where you have obviously a more fragmented market because you have multiple countries and different laws and whatnot. So it's certainly going to help. Even if you look at market data, for example, in Europe, you don't have centralized feeds for all the markets. So that's obviously hampering things. I would say the flip side is that regulation is actually what really hurt the banks. And back in the post-mortgage crisis, at the time, the regulation was not about helping the customer, where it was about making sure, they wouldn't go bankrupt. And so the regulation will force the bank to do certain things, which sometimes might be beneficial to them and maybe not. And in the case of past regulation, it's essentially what opened up the road to Silicon Valley to reinvent financial services, because banks had to focus on that instead of focusing on innovation. So we always have to worry about the regulation as a double-edged sword, especially if the standard becomes too complicated, especially if we don't focus on simplicity, applicability, business value, but instead we get caught into a lot of the details. And I'm just going to use an example here of the XBRL standard. I'm not sure how, maybe it's not entirely relevant there, but in the U.S. we introduced an XBRL standard many years ago with the idea of being able to make sure large public companies would be able to report their financial statement in a normalized fashion. And that standard was introduced, and it could have essentially forced everybody to use that standard and eliminate the need for aggregation, for normalization, and whatnot. The problem is the standard became too complicated. Accountants got a hold of it. It became incredibly complex, and actually the result was not achieved. the standard itself does not facilitate that much consumption of data by many organizations. So I'd say you have to look at those standards and see what they can enable, but make sure that it doesn't go too far. That doesn't actually put a burden on creativity and innovation and create more costs, more constraints for the banks at the time they don't need it. They need to be able to innovate. So that would be my thought on this.
That's a great point. Maybe Giles or Bharat, do you have a view on that? I mean, could the same happen, what Stefan described also with PSD2? And maybe do you also have a view on the whole UK development regarding Brexit and the own development of an API?
So this is Giles. I'll take a first pass at that. I'm based in North America, but I think view Europe as actually leading the way in many ways with their regulation. So I agree with the previous comment that there's always a threat that if there's a imposed regulation or standard that can be complex, there's a risk that it could be counterproductive and could slow innovation. But even the predecessors to PSD2 and things like the Single European Payments Association, I think especially in some of the more retail and consumer payment functions, Europe has done a good job of using a regulatory environment to foster innovation. Speaking to American banks, if you propose the idea that non-banks would be able to issue payment card products, that third parties would be able to access their account information and initiate payments on behalf of their account holders through APIs, and that would be standardized and that would be offered for free, is almost like a shocking concept to a lot of kind of North American audience. And I think Europe is using regulation in a strong way and really fostering a landscape that will drive competition and innovation in a lot of interesting ways. And you see, I think, with especially the pure, let's say, challenger banks, an Atom Bank or Number 26 or Tandem, those I think wouldn't be possible in many respects in another environment where, let's say, the hurdle to get a banking license is as high as it is, let's say, in the United States or in Canada or other markets where the kind of regulatory mechanisms are more stringent. And that's where I think the counterparts that you see in the United States, like a Bank Simple, which is the same function, they're basically renting the back-end banking infrastructure from a traditional player because it's just really not possible. And so I think the approach that Europe has taken is for the most part, opening up a lot of opportunity. And briefly, I think on Brexit, that's likely going to be a bit of a crack in that. We see, the Single European Payments Association, some of the ways that banks and financial institutions are able to passport those licenses and operate more freely within that regulatory environment, probably being dampened by, let's say, the Brexit. It's certainly right now, I think it's still just a wait and see because nothing's quite conclusive yet. But I think from what we're hearing, the feedback we're getting from entities that are UK based is looking at this as potentially forcing a change and not really a positive one, but something that they'll have to adapt to, and one more layer of complexity as opposed to what has been a early kind of fortunate environment within the Europe, which is kind of bringing a fragmented market together in many respects, thanks to this regulation and some of the approaches that they've taken.
And Lars, hi, this is Bharat. Okay, so just a couple of comments. So I do agree that the regulators are doing a fantastic job, particularly the UK's Financial Conduct Authority. If you have time, if you just Google Project Innovate, just in the last 12 months, they had 631 requests from existing incumbents and FinTechs to help them with the regulatory aspects. So they are doing a great job. Now, and the reason they are doing a great job, in my view, is to prevent another 2007-2008 financial crisis by distributing power to many players in the industry, not just the larger banks. And they're doing this by asking the banks to open up the infrastructure and create offer that data that's been hidden behind 7 or 10 firewalls to smaller companies who have innovative ideas but not access to data or to customers. So there's a potential win-win opportunity for the banks. So they could potentially collaborate, and we're beginning to see evidence of that, where banks are beginning to collaborate with the fintechs to offer their services to their tens of millions of customers. So it's a win-win situation. To comment on the standardization, now regulators tend to stay away from defining very precise standards, because whilst on one hand larger banks and financial institutions would love to have a very prescriptive standard, so that they can just tick the box and say, yeah, we've done that. Smaller players, on the other hand, want more flexibility, etc. So so we are unlikely to see a standard, and I think this is a key problem, at least in Europe, because there are approximately 5,000 financial institutions affected by PSD2. If all 5,000 implemented APIs in at least 2 different ways, you're looking at a big array of APIs, and fintechs and startups would have a right nightmare trying to integrate across multiple organizations. So the UK, one of the things that I have seen, at least here in the UK, is the UK's Competition and Market Authority has just appointed an open banking implementation committee, and their role would be to define that API standard, security standard for the financial institutions. So keep an eye out on that. In the next 6 months or so, you will see a first draft of API and data standard that the banks will need to use to expose product and customer data and transaction data as well.
Yeah, indeed. I mean, as I mentioned before, the development in the UK is quite unique. I mean, even though maybe with Brexit and no obligation of PSD2, there's still going to be a similar standard, maybe an even higher or better standard than the rest of the European Union. So it's interesting to see what will happen over there. I can give you a little bit of a German point of view of that. I mean, in Germany we have something like not a standard, but a way to access financial data already since 15 years or something like that, which was developed by the banks themselves. And that also didn't end up in a standard. And there's still a company like Figo, so our company, who is offering one API, and it still makes sense to use us instead of connecting to all the banks individually, because it's just so annoying if everyone is just using a different API, different way of accessing. So to sum up, I take a look at the time. We have roughly 2.5, 3 minutes left. We have to make a hard stop. So first of all, I would thank everyone for participating. Before or while saying goodbye and thank you to everyone, I would like to ask everyone in the order here, Bharat, Stefan, and Giles, maybe very briefly, but if you had one wish about the future of smart APIs, financial data, anything, what would you wish for? Maybe Bharat, please start.
I was wishing you would come to me last, because I haven't thought an answer. But let me think on my feet. So if I had a magic wand, what I would like from the world of IT and the business is to agree on making it easy for developers, making it easy for everybody. So in the PSD2 context, I have conversations with my clients who don't see the value of making it easy for everybody to adopt their APIs. So if there was a way for them to see that by making it easy for developers, for third parties to access your APIs, and therefore your data is value creating for you and for your customers, I think that would be my one wish. So it's not actually an API specific wish, but it's making it easy to adopt APIs is what I would like to see from this.
Okay, thanks, Bharat. Stefan?
Yeah, for us it's simple. We think the data should be stored once and in the cloud. So our wish is to have data stored once in the cloud for the whole industry and everybody consuming it via APIs.
Okay, thanks. And Giles?
Yeah, I think when I think of these things, it's often helpful to think from a consumer perspective, and I think my wish is probably just being fulfilled as time moves on. And as a consumer, I want my banking experiences to be faster, more convenient, to be more cost effective. I think everyone on this call is involved in enabling that in one shape or another, and so I think if anything, my wish is maybe just to time travel a little bit in the future, where some of these how challenges have been worked through, and we can kind of get to that state that we probably all envision, which is really a much more robust and comprehensive digital ecosystem, where all these things that we can kind of get glimpses of, where you're getting your taxi from Uber and Uberization of banking, all these things kind of comes to fruition. And I think the user experience, the consumer kind of improvement of all this, the cost benefits, all of that will be evident. So I think very much looking forward to that.
Okay, great. I mean, to end with, or to give you my wish for the future, I think you guys mentioned already open APIs, open banking, all of that, lots of opportunities. I would like to wish just that everyone embraces opportunity and tries to implement the advantage of it, and not fight against these kind of things. So I think there's already 61 minutes, so we are nearly ending. So I'd like to thank all of you guys. Thanks a lot for participating, for all your inputs. As mentioned here on the slide, if there are some questions we haven't covered yet, I think all of us are somehow you're able to find us somewhere, either on Twitter, LinkedIn, maybe find an email. Reach out to us if you have any questions we haven't answered here. I think all of us are happy to do so. And thanks guys, and enjoy your day.
Thank you.
Thank you.
Thanks. Bye-bye. Bye.
Bye-bye.